Tariffs are off, then on, then off, and the uncertainty has whipsawed markets. This is Macro Matters, and we're talking trade. The Trump administration has suspended tariffs on most goods coming from Mexico and Canada for a month, only 2 days after it imposed them. The turbulence has rocked the stock markets, but what could it mean for the wider economy? Rebecca Harding is a trade economist and supply chain specialist. Rebecca, you see this whipsawing that we've seen this week as part of a broader trade policy from the Trump administration, don't you?
Indeed, I do. And I think what we are seeing at the moment is a massive disruption to the entire international trade system. It's been going on for a while. I wrote a book actually 6 years ago now in 2017 called The Weaponization of Trade. And I argued in that book that what we were seeing was a major disruption rhetorically. We were beginning to lose the language of collaboration, even under Trump 1.0. We weren't talking about opportunities anymore. We were talking about enemies. We were talking about trade deficits. And what's happened during the Trump 2.0 administration in the last few weeks has been quite extraordinary. So we've seen not just the weaponization of trade, but actually trade being used as a coercive tool in national security strategy. So if you look at the Trump trade doctrine at the moment, it's actually all about economic security. Scott Bessent said that the other day. You've got economic security front and center of that document. It's mentioned 12 times. Deficits are only mentioned 3 times. So this isn't an economic thing. It's a geo-economic thing, which is ultimately also political.
But what do you think they're trying to achieve when you talk about economic security? Because these tariffs are, of course, damaging for the US economy too.
Of course. And again, if you listen to Scott Bessent the other day, what he was saying was, we are prepared to take some of that pain. We're prepared to take some of those increased prices. We're prepared to put up with some of the discomfort. The farmers are complaining at the moment, and, it might affect energy prices and all sorts of things like that. But what they are trying to do is bring everything back into an American context so that America is in control of, so to say, its own destiny. And I think that's really interesting because America always saw itself as part of an international rules-based order. Dollar hegemony was absolutely front and center of that. The dollar role in all of these international institutions and in financial markets and in currency markets was key. And what they're actually doing is dialing back a little bit from all of that and saying it's more important that the American economy is in and for itself strong and able to compete. It's less dependent on trade than, say, the European economy is, and therefore it feels that it's got the power to be able to do that. And one of the really interesting things that you're seeing at the moment is this sort of Mar-a-Lago Accord type conversation that's at the back of financial markets, which is all about whether or not the currency can be devalued. It's sending very strange signals to the markets.
In terms of business investment decisions, though, is that likely to play out in the way that the administration hopes? Will companies return production to the US? Does it make sense for them to do so?
A lot of that will depend on the relationship that Trump develops with the manufacturing base, whether there are tax cuts, whether there are those types of incentives to relocate. But ultimately, what this is going to do in the short term may create long-term damage, a bit like we had with Brexit. The costs are higher, the uncertainty is there, companies find it very difficult to invest. We see prices rising, inflation rising, and so the immediate reaction to all of this huge uncertainty and unprecedented uncertainty is always going to be to hold back on investment. And that's the big problem. It's actually making sure that the US economy has a long-term strategy. And at the moment, it's hard to see because of this volatility almost in decision making. 1 minute you've got tariffs, the next minute you haven't. Then you've got them being imposed again. Then you've got another deadline. And it's all for coercive reasons. So it's complicated.
Do you think, as you said, that part of the aim is to devalue the dollar, and will that happen?
President Trump has always had an aversion to a strong dollar, and yet on the other hand likes the principle that the dollar is the world's reserve currency and is powerful. It's a very contradictory position. And I think there are some paradoxes in the economic policy that we're seeing at the moment as they start to unfold. So, one of those huge paradoxes is the fact that tariffs actually tend to push up the value of a currency. So, the policies at the moment, tax cuts to try and incentivize domestic production, um, and the focus on tariffs to make more internal production again actually would have the tendency to push the dollar up. So there's this kind of contradictory set of forces going on, and this is what's creating the market instability at the moment. People just don't know what to make of it all.
That was trade economist Rebecca Harding. Don't forget, you can watch more videos on Reuters.com.